The Federal Reserve has been able to successfully prop up the stock market by engaging in an extended period of unbelievably low interest rates and excessive monetary easing with QE. It has become obvious that the Fed's balance sheet is directly correlated with the performance of the stock market. All major US indices are now lower than they were before QE3 ended. You came here for the truth, so let me unveil that for you. It is no coincidence that the Fed's balance sheet and the stock market go hand in hand. This is because simply it is a requirement for it to go up. If regular people aren't buying into the stock market, the Federal Reserve is going to have to come and pick up the pieces. I'm going to show you more on that in a minute. Let's look at these charts. The first few are directly related to this statement right now. As you see this, now this chart right here is something that every single media outlet around the world should be showing right now. This is absolutely key. Look at this at the beginning, ended of QE. The Federal Reserve stops printing money for QE3 after they began winding it down, or the tapering. And then you have this time period, and you will see that it fluctuated up and down a little bit on the higher side, but more recently has come down significantly. And it has done so to a degree where it is lower than it was when QE3 ended. So think about all the trillions of dollars that have been printed to get this market going. It hasn't done that, in fact. It has propped it up to the level they needed to get at, but as soon as they pulled out, the market didn't go anywhere. And that's with the extremely low interest rates at the same time. So this is an absolute disaster, a completely failed policy, because you want to print money and you want to have low interest rates so that the market can get it started. But that hasn't happened. All of the money they've printed has been a requirement to get the market up to that level. It hasn't become an engine of growth. Printing money does not create wealth. It does not create any jobs or anything for regular people. It doesn't ever work like that. Let's move on to this. It's showing you the major US indices here and going back to the levels of Black Monday. Similar chart, just wanted to show you this in a different format. And you can see this, it's very easy to see. Printing money doesn't work. It never really has, and it never will, because of the way that it's designed. You can't print money and have it actually generate wealth in the way that it is being done right now. Central bankers are there for one thing, and that is to basically increase corporate profits for the major corporations who are owners of them, and so on and so forth. Not the topic of the video, but here we go. This chart right here should be front page news in every outlet, whether that's the mainstream media and the alternative news. Now, obviously, we know what the mainstream media is going to do with this type of information, and that is ignore it. But the alternative news should be discussing this consistently. We need to make this front page news. The Fed's balance sheet in the S&P 500, it's practically a straight line with them. I can't believe how accurate this is. If you want to know where the S&P 500 is headed, just look at the Fed's balance sheet. That's all you need to know. This is incredible. This is so directly correlated that it's practically even, and yet people completely ignoring it. This is very, very sad, very unusual, actually. I'm finding even in the alternative news who is seemingly ignoring this chart. Then we look at this. It's a chart or a diagram that I have shown countless times. And you will see that the Federal Reserve buying up all the debt of the US, and this goes for other central banks around the world. I'm just choosing the Fed as an example for this video. They're going to be left with this pile of IOUs, this pile of garbage. And the intention is that they take this off the hands of the government, and what they will do is sit on it, and eventually there'll be a buyer for it. But what if there really isn't a buyer? What if they create so much debt that they never find a buyer for it? Well, it will be sitting on their balance sheet, and this is a very, very dangerous activity. As they print more money, as they enter a worse and worse situation, the Federal Reserve basically has to come in and bail them out an increasing level. If inflation continues to increase, the stock market may in fact go up. They can do this. They print money, it makes the stock market go up, but not without its consequences. You need to understand that's a devaluation of the currency. This is going on right now. I've shown you different countries that are engaging in this policy right now. And if you think that the stock market going up nominally, even though the actual value of your currency in terms of real goods, think about this for a second. Real goods, what your dollars buy you at the store, food, for example, that has been declining. That's undeniable. And you look at the countries right now that their stock markets are skyrocketing, but only because of the devaluation of their own currency. I've shown you that before, and I'm going to mention it every single time because of all the naysayers. Okay, let's move on quickly before I rant. This is the Thai baht, basically Thailand's currency, declining, lo and behold, back to 2007 levels. We have a financial crisis, part 2. It's going on right now, and you can see that individual currencies are hurting. It's not just those currencies, it's the stock markets that are affected. It's everything in line with that, and you need to realize how it is all interconnected. You take this, connect the dots for yourself. Then you have Jim Cramer, stop freaking out about biotech. It will be fine. And then, of course, it declined after that. On the more towards the left there, it says, Yellen warns biotechs and social media stocks are stretched. And then a little while later, Yellen says equity market valuations are quite high. And then we have, of course, the market tumbles. You can't really look at what they say definitively. You never know what's going to happen with this, but we know that we can track the performance of the S&P 500 and the Fed's balance sheet and see that they are completely corresponding. Then let's look at this. U.S. financial stocks, U.S. financial credit, both going back in time. Another trend that is continuing, something that we should definitely be paying attention to. China money rate drops after the People's Bank of China's injection. And we're looking at basically what they were talking about is 40 billion yuan, increasing, putting them into the market, trying to get this economy going. They're trying all different things around the world. We're seeing negative interest rates. We are seeing this injections of money or quantitative easing. We're seeing purchasing of stocks directly from the central banks or indirectly in the case of China. Nothing's working. You can see all of these policies. Think about what has happened since the financial crisis. Every single type of activity they've done, whether it's TARP, whether it is the public works projects, the quantitative easing, low interest rates, negative interest rates, all of the tax loopholes and everything for the big establishments, absolutely nothing has been done to support the real economy. So take a guess to what's going to happen over the next few years as they become more and more desperate. You're going to see more volatility. You're going to see more people in poverty, with nearly 50 million Americans in poverty today. I just wanted to throw this in at the end of this article, not directly linked, but very important to note this article. Fukushima reactor number 2 could have suffered a complete meltdown, according to the Japanese researchers. They're monitoring it, but they've only found few signs of nuclear fuel at the reactor's core. It's only a few signs. Yes, they did dump intentionally the water that used to be radioactive, but they promise it's not anymore, and they dumped it into the ocean. But there's only few signs of a nuclear reactor meltdown. The team believes that 70 to 100% of the fuel has melted. though they did add that further research was needed to see whether any fuel had managed to penetrate the reactor. Oh yes, they did most likely have a meltdown, but don't call it a meltdown, and everything's under control, and this is no different than what happens in the financial industry. There's a meltdown going on right now today in this financial system. Look at everything they're throwing at it. They're throwing trillions of dollars. Every single country is printing money, low interest rates. Nothing's working. They are suffering badly, and it is being covered up. And slowly but surely, we're beginning to see the cracks forming, and it is getting worse and worse every single day. If you found this video informative, please give me a thumbs up. And last but not least, if you found the video informative, then you'll definitely want to check out my book, The Money GPS. At Amazon, they have this look inside feature, which allows you to flip through the pages of the book and see if you like it. Take care.